Hey guys, Stock Saturday, Friday night for me. Market has just finished, and yeah, I've been absolutely walloped. You might have sort of seen this coming with gold and silver prices and crypto sort of not doing particularly well. I had been sort of outperforming for a few weeks, and market gods aren't particularly happy with that. So we've had the Iran war sort of start with the US. Sort of can't really call it a war. It's just airborne assault from the US and Israel. But yeah, that has sort of caused all manner of things. I thought gold and silver might have held up a little bit better, but there you go. But overall, nearly 8%, 7.8% down for the week, or 146,000. So yeah, quite the walloping. The S&P is down, to be fair, but down 1.24%. So yeah, quite a worse week compared to the S&P. Um, Somehow the Nasdaq has ended up 0.8% up for the week. So yeah, quite surprising. Had a fair drop down on Tuesday and has sort of been up and down all over the shop, to be fair. Although, as I say, I had been sort of outperforming for quite a few weeks. I'm actually up on a month ago. It looks like 7th of Feb. Done a video at sort of 50 grand lower than I am today, and so I was up 50 grand in the last month, and the S&P is down 2.77%, and Nasdaq down 1.73%. So over the last month, still outperforming, but just yeah, got my arse handed to me this week. Having a look at some news and earnings. We got news from herein that they are expanding aggressively, even more GPUs, buying what I believe are the latest B300s. I don't think there's anything sort of newer than that just yet. So yeah, over 50,000 NVIDIA B300s takes them to 150,000. This is sort of making the Bitcoin side going to be largely a small part of their operations now. They're really going in hard on the AI side. So have to hope that pays off. Obviously, I don't have the options anymore, so it is just a stock position. But yeah, we'll have to see how this goes. Hive, obviously, my much bigger bet, to be fair, but yeah, got Broadcom's results, a very solid, they call it first quarter fiscal year. It sort of runs slightly out of the calendar year. Fiscal year ended February the 1st, so a bit of a strange time, but there you go. So on a gap basis, it's still a little bit off. They're still sort of churning through, would you believe, the VMware acquisition. It was a very big acquisition, so it still has to sort of work its way through, but numbers looking really solid. 29% revenue increase from this quarter last year. Net income is sort of a little bit all over the place, but 34% up from last year. Earnings per share 32. So on adjusted basis, it is quite similar actually. 29%. Obviously, revenue doesn't change with non-GAAP, but net income 30% instead of 34. They do some adjustments, which I note later on. Cash flow from operations, sort of pretty much everything is up nearly 30 to 35%. And sort of by segment was quite surprising, really. Infrastructure software up 1%. So this is sort of the VMware is included in this. Wondering whether there's potentially a bit of AI to sort of hit VMware and their other sort of infrastructure software side. Obviously, semiconductor solutions doing well, 52%, but yeah, obviously their very large acquisition was a software company, so we'll have to see how that goes. Um, Announced their dividend, 65 cents per share. I think that's up quite a bit, but it's a very small yield now, sort of 1%, I believe, on an annual basis. Not exactly a lot. Second quarter guidance as well, 22 billion in revenue. So compared to 19.3 in this quarter, up nearly 10% sequentially. This is 29% year on year, but up 10% quarter to quarter. That is kind of crazy. And they were always saying 60% adjusted EBITDA, and they're projecting 68. So they've been getting 66, 67 last few quarters. So projecting a slight increase on that, which is very, very nice. Doing more buybacks as well. Repurchases of $10 billion. Not exactly a huge amount, but I sort of call it turbo juice, basically. It's just providing that sort of extra little bid, or potentially a bit of support for if people are selling the shares. At these sort of PEs, it's not exactly long-term shareholder friendly to be spending 10 billion on buybacks. I would kind of rather they just sort of went and bought something, maybe a sort of either a stake in a company or sort of a small physical semiconductor startup, analog sort of stuff. But they're deciding to do repurchases or pay off some of the debt, of course. Coming to their balance sheet, we kind of noticed that they're not really paying down their debt as they said they were going to be after the VMware acquisition. So cash is down 2 billion-ish. Not exactly great. Goodwill stayed the same, so they're not sort of making adjustments to that. Intangible assets down 2 billion, so working through some stuff. And short-term debt reduced by 900 million, but long-term debt increased by 2 billion. So yeah, overall, looking at sort of 65 billion when is this? Is last quarter, November the 2nd, 2025. So 65 billion in debt to 66 billion in debt. They're not great, but I guess they think they have better uses for the money. And those adjustments, I say this every quarter, but some of this is fair to be adjusting and some of it isn't, I don't think. Amortization of acquisition-related intangible assets is not a one-off. That obviously, is there every quarter, but it's not, a long-term sort of hit to the income statement. It will go eventually, assuming they don't make another enormous acquisition, which they might do, but you sort of have to look past that. Whereas stock-based compensation, they remove on adjusted net income, and I don't agree with that. It's it is an expense, and those people will eventually be selling those shares, so it's share pressure, sell pressure from that, and I don't really see why it should be removed. But overall, you have to say it's extremely strong results. They're obviously at a very high PE, but at 30%, top line growth and 30% over 30% earnings growth, kind of deserve that. And they're forecasting, exactly the same for the second quarter. Carry on this AI boom. So we got Fresnillo's results. Obviously, this is quite a bit out of date. We don't want to be sort of looking at 2025 for too much longer. Sort of 6th of March. These came out on the 3rd of March. They just take a while to get going. UK companies, sort of not exactly the fastest. Looking at their sort of presentation, because it's just gives a little bit better better visuals really, and they sort of split down their operations and reserves, all-in sustaining cost, which is sort of quite handy. All-in sustaining cost of like $27 on silver, which is high, but yeah, not the worst. Salsito, $18.90 is a little bit better. $12.90. That is very, very nice. And then the sort of more gold focused mines, so got $1,628 all in sustaining cost. A lot of people still try to get to $1,500 if possible, but $1,628 I think I would see as pretty fair. And then they have their sort of high cost mine is 2,224. Not exactly great. And then the San Julian, this is sort of winding its way down, about $19.80 all in sustaining cost. So they're still obviously got enormous amounts of reserves and resources, 2.06 billion ounces of silver. Not many people have a billion ounces of silver, so yeah, very nice. 362 million as well in reserves, and then 44 million ounces of gold and 7.8 in reserve, so that is an enormous amount of metal. They're sort of talking about their pipeline, various projects that they've got underway, and they did make the acquisition of Probe Gold. So yeah, there's plenty more there. Income statement is looking pretty solid. Revenues obviously up with gold and silver prices being up. 2026, so far is certainly a lot better than the first few months of 2025. So yeah, should be seeing even more solid numbers for 2026. But not just increasing revenue, decreasing cost of sales. So adjusted production cost in total down to 1.4 billion, and a little bit less depreciation as well. Yeah, overall, that is a great boon to net profit, of course. So it's not really a fair comparison. They did have a exceptionally large income tax expense last year, which is sort of a little bit of an anomaly. But yeah, up from 226 million to 1.57 billion net profit. Very, very nice. Maybe looking at EBITDA is a little bit fairer. 1.5 billion to 2.8. So very, very nice. Looking at their sort of production as well, or revenue by metal. They sort of give that in pie chart form, which is a little bit handier down below. And they've got this handy slide for guidance. Not many of the, well, I don't think any of the major sort of gold producers I've seen give quite this long a guidance. This obviously will change year to year. You can't expect 2028 numbers today to be, very, very close to that when we actually get there. But it's nice that they give this outlook. So silver and gold is expected to drop a reasonable amount in 2026, sort of a preparation year, slightly lower grades, and then it resumes back at sort of 50, just potentially over 50 million ounces for 2027 and 2028. So I would hope people can sort of look through this slightly poor 2026. If they're on the lower end of this, it would be sort of 42 million ounces of silver, potentially losing the crown of number one to KGHM, as far as I can see, if they have a good year, but then sort of coming back to top spot in 2027 and 2028. And gold side, sort of mid 500 million ounces back to sort of 600 million for 27 and 28. And sort of going forward, they have their probe gold acquisition, which they're looking to build out. So it's making them a little bit more gold focused, which is not exactly what you want. And then lead and zinc obviously don't make up all that much of revenue, which they do show, but handy to see them similarly down and then up in sort of 27 and 28. They do show their sort of exploration and building projects, sort of various new mines coming into production, sort of mid to late 27, 2029, 2031. So they do give you quite a long guidance, really. They're showing grades sort of coming down for 2026, and then expecting to get at some better stuff after 2026. And then so they show they are actually majority silver. 45% gold and 47% silver, so slightly below 50%, but it is the dominant the dominant metal by just a couple of percent. I don't think many other miners are dominant in silver to this extent, so it is very nice. And obviously not having any withholding tax on dividends and things, no FX impact, is quite nice. So looking at some of the economic news, we had some interesting numbers this week, a lot of PMI data, which I am sort of keeping an eye on. Noticing some people sort of pointing out that Bitcoin and in some ways silver have been tied to sort of manufacturing numbers in the past, which I hadn't sort of picked up on. And this sort of surprisingly depressed time for Bitcoin, especially in 2025, has coincided with a sort of sluggish manufacturing. So this potentially breaking out, even if it is mainly due to sort of AI capex and defense spend, still could be good. And these numbers are starting to look up. European numbers above 50 now, was 49.5 up to 50.8. UK manufacturing was slightly worse than expected, but is still above 50 and is higher than Europe, to be fair. And then US numbers, 51.6. The ISM number, from what I gather, is sort of more global, US dealings with other countries rather than just US manufacturing domestically. And that was 52.4, 52.6 last month. So, ever so slightly down, but was better than expected. And, 52 and above is quite a bit of expansion. Prices at 70.5. That is quite strong. So activity up, but people paying an awful lot for it as well. And employment sort of below 50, but slightly better than expected. So looking quite good. February CPI numbers, these are provisional for Europe, 1.9% and 2.4% on core, so both higher than expected. But if the target is 2%, that's not the end of the world. People may look at it as a short-term thing. And then Wednesday, some more sort of PMI numbers, but for non-manufacturing, and all looking fairly strong. The sort of non-manufacturing PMI, that's basically the US economy in a nutshell, really, being a service-based economy. 56.1, so quite a bit higher than last month and quite a bit higher than expectations for this month. So very nice. ADP non-farm payrolls, but possibly the the more realistic number, with the official number sort of being trusted a little bit less these days, was 63,000. Last month's was revised down, to be fair, but yeah, this month was better than expected. Thursday, not really a lot happened, just your job numbers and bits. And then, so the official non-farm payrolls came out today. They revised last month's down slightly. This month was expected to be 58,000, and it was minus 92,000. So quite a staggering miss there. You know, whether this is people not responding to the survey, that is what sort of a lot of people keep citing. People haven't got time to do the surveys, and maybe we should focus on the ADP number, since it is people's, salaries basically going into that data, rather than sort of phoning people up and asking them how things are. Unemployment rate as well rose, wasn't expected to, 4.4%. But earnings still sort of fairly positive. So, and all of this negative non-farm payrolls is in the private sector as well. So 86,000 jobs lost in the private sector. Whether this is layoffs from software companies and things, imagine a reasonable amount of that is. So yeah, not exactly looking great there, but it doesn't seem to be, obviously with oil absolutely rampaging, it doesn't seem to be having an impact on Fed sort of outlook for rate cuts. So portfolio-wise, had some wild swings this week. Applied Materials has gone top by sort of 150 quid. But it is 12.5% down for the week. It's just some of the others were down more. KGHM 15.2%, Coeur Mining 16%, Fresnio 17.2%. Samsung took quite a hit, 16% down. CME Group, I do love, is the sort of almost not a negative correlation with the market necessarily, but not all that correlated with the market, down 0.45% for the week. Amazon actually up, to be fair, and Euronext up. My CF Industries, sort of on the agricultural side, not doing too bad. And yeah, some sort of reasonably big numbers elsewhere. TSMC down 9%. Yeah, quite a few sort of high single digits here. B2 Gold 13.3, so that has had quite a knock on the options, of course. Equinox and B2 Gold both down sort of double digits. That means the options get whacked quite a bit. 27% down on B2 Gold. I did buy a little bit more of the January 2028 options, because just think there's plenty of time for those to come good, plenty of time for B2 to sort of work through their issues, a lot of which should be sort of largely resolved by the end of the year. So yeah, there's hope there. Oh, I did buy a little bit more BlackRock on the dip as well. I had 40 shares up to 50 now. I did buy at 971, so yeah, it's come down a little bit towards the end of the day, but can't time these things perfectly. Even the ETFs sort of taken a reasonable knock. Obviously, the S&P not quite as bad down as these, and at least the Nasdaq one is sort of almost flat. Emerging markets sort of taking quite a knock, and the robotics down 7%. That's quite a knock. But crypto, surprisingly, is doing all right. The miners sort of getting knocked down with the rest of the market, and sort of have been a little bit all over the place. But crypto itself doing okay. And it looks like these sort of aren't allowed in the ISAs from April onwards, but it looks like somebody on the Discord mentioned from sort of confirmation from Trading212 that you won't be forced to sell these positions. They'll just be sort of sell only. So hopefully I can just hold on to these in the ISA for, maybe a year or two. Hopefully we get a nice sort of crypto bull market, and I can sell them and won't have to sort of look into sort of selling these and rebuying outside of the ISA and then getting taxed on it. And yeah, that would be nice if that is true. So yeah, interesting week. Outperforming for a few weeks and then get absolutely walloped. That's the way. But leave your thoughts in the comments below and like and subscribe. See you soon.